7 pieces of news from the world of the crypto industry. First news. Bitcoin may drop by 20%. According to Bitfinex analysts, the future of the leading cryptocurrency largely depends on the interest rate decision that the U.S. Federal Reserve will make this month. In their report, the experts explained the recent 32% increase in Bitcoin due to speculation about a dovish stance from the agency. However, they noted that the expected rate cut could significantly impact both the short-term volatility of BTC and its long-term prospects. A 25 basis point cut is likely to signal the start of an easing cycle, which could lead to a long-term rise in Bitcoin's price as liquidity increases and recession fears ease, the Bitfinex analysts wrote. They also warned that a more aggressive 50 basis point cut could trigger an immediate price spike, followed by a correction as recession fears intensify. The analysts expect that after the rate cut, Bitcoin could face a 15 to 20% drop to $40,000 to $50,000. Their forecast is also based on the fact that September is historically a turbulent month for the flagship asset. They noted that Bitcoin's volatility combined with the risk of mass sell-offs amid the rate cut could create both risks and opportunities for traders. The U.S. Federal Reserve meeting will take place on September 17 to 18, and most analysts expect an interest rate cut. However, it is unclear how significant the change will be. Second news. Qatar introduces a regulatory framework for digital assets. The Qatar Financial Center has introduced a comprehensive regulatory regime for the creation and regulation of digital assets. The QFC regulators, the Qatar Financial Center Authority and the Qatar Financial Center Regulatory Authority, have announced regulatory frameworks that establish the foundation for the regulation of digital assets within the QFC. The rules include processes for tokenization and legal recognition of token ownership rights and underlying assets, custody agreements, and the transfer and exchange of tokens. Additionally, the regulatory framework includes provisions for the legal recognition of smart contracts. Similar to free economic zones in the United Arab Emirates that operate independently of the mainland, the QFC has its own legal, regulatory, tax, and business framework separate from the rest of Qatar. The QFC allows up to 100% foreign ownership and 100% repatriation of profits. It also charges a competitive corporate tax rate of 10% on locally sourced profits. Supporting Qatar's digital transformation. According to the announcement, the regulatory framework will ensure the security and transparency of the digital asset ecosystem within the QFC and compliance with international standards. The QFC stated that the regulatory framework sets standards for the tokenization of assets. Moreover, it aims to ensure trust and confidence among consumers, service providers, and stakeholders. The governor of the Qatar Central Bank, His Excellency Sheikh Bandar bin Mohammed bin Saud Al Thani, said that the newly launched regulations are a significant milestone in implementing the country's third financial sector strategy. He believes that the regulatory framework will unlock significant opportunities in Qatar's financial sector. In November 2023, Qatar launched its third financial sector strategy to create a capital market to help the country unlock its economic potential. The plan includes the use of new technologies to accelerate digital transformation. The regulatory framework for digital assets is also the result of collaboration and consultations with industry stakeholders. According to the QFC, it was developed with the support of an advisory group consisting of 37 local and international organizations working in finance, technology, and law. The QFC added that since the launch of its Digital Asset Lab in October 2023, it has accepted more than 20 startups to develop, test, and commercialize their products and services. Third news. Japan is considering changes to laws regarding cryptocurrencies. In a published request for changes to tax legislation for the 2025 fiscal year, Japan's Financial Services Agency, FSA, has officially considered issues related to cryptocurrency transactions for the first time. In particular, the agency emphasized the need to study whether digital currencies should be considered a financial asset suitable for investment, which could lead to significant changes in the legal regulation of this area. Each year, Japan's ministries and agencies submit requests for legislative changes, which are then reviewed and discussed at various levels, including the government's tax commission and parliament. While the submission of a request does not yet mean an immediate change in the rules, the mere mention of cryptocurrency in this context indicates growing attention to digital assets. The document notes the need to expand opportunities for investors in financial assets, including by extending loss compensation practices to financial instruments such as derivatives and bank deposits. One of the key issues that remains on the agenda is the potential for changes in tax rates on income from cryptocurrency operations. Currently, profits from such operations are taxed at a rate of up to 55%, depending on the amount, which is significantly higher than the 20% rate applied to investments in the traditional financial sector. Representatives of the crypto industry and investors have long called for a review of the system and a transition to a single rate. Vice Secretary of the Liberal Democratic Party Masanobu Ogura emphasized three key points that should be considered when transitioning to a split tax system for cryptocurrencies during the WebEx conference. These include the existence of a theoretical basis, economic feasibility in terms of tax revenues, and public support. He also noted the importance of recognizing digital currencies as a tool for accumulation, which could facilitate their inclusion as financial instruments taxed at a reduced rate. Fourth news. Researchers analyzed Bitcoin's Sharpe ratio. The short-term Sharpe ratio of Bitcoin recently dropped to levels reminiscent of September-October 2023. This indicator, which measures risk-adjusted returns, suggests that Bitcoin is entering a period of uncertainty. The last time the indicator reached similar lows, the digital coin showed a notable price rebound, creating an entry opportunity for risk-tolerant investors. Historically, a low Sharpe ratio has often coincided with significant market reversals. In September-October 2023, the decline in this indicator was quickly followed by a rise in Bitcoin prices. Those who took advantage of this short-term dip reaped substantial profits. For optimistic investors, the current decrease in the Sharpe ratio could be seen as a potential signal of an upcoming recovery phase, much like the one observed last year. However, for those who are more cautious, this may indicate high market volatility. Uncertainty could prompt traders to stay out of the market until a clearer trend emerges. Analysts at CryptoQuant note that the previous growth was partly driven by positive news about the upcoming launch of a Bitcoin spot ETF. Although similar catalysts have not yet appeared, there remains the possibility that upcoming market news could once again spark renewed interest and drive up prices. Researchers advise investors to closely monitor any additional signals that might confirm or refute a potential market reversal. While the historical picture is tempting, only time will tell whether Bitcoin is on the verge of another rally or facing greater volatility ahead. Fifth news. Monthly NFT sales have dropped to a yearly low. In August, non-fungible token (NFT) sales fell to $374 million, which is 76% lower than the highest monthly figure this year, which was $1.6 billion in March. The first quarter of 2024 was successful for the NFT market, with trading volumes reaching $4.1 billion from January to March. However, the following months were less successful. In the second quarter, the figure dropped by 45% to $2.24 billion. In July, NFT sales amounted to $427 million. The last week of August saw a slight uptick in NFT sales, but it was not enough to correct the situation. The total number of transactions in the last month of summer was 7.3 million, which is 31% less than in July, when the number of NFT transactions exceeded 10.7 million. At the same time, the average NFT sale price increased by 27%, rising from $39.93 in July to $50.74 in August. In the last days of the month, this figure rose to $86.04 per transaction. Many experts believe that NFT holders are redirecting their funds from non-fungible tokens to meme coins. For example, this is the opinion of Galaxy co-founder and CEO Solo Ceesay. and the founder of the trading platform sites HiFT.ai, Andreas Brecken, stated that NFTs will soon be worthless. 6th News. Scottish police confiscated Bitcoin for the first time in a robbery case. The Edinburgh High Court approved the confiscation of 23.5 BTC in the case of John Ross Rennie, who was involved in a robbery in Blantyre in 2020. This was reported by the BBC. Background of the case. In March 2020, a group of unknown individuals broke into a couple's home in Blantyre. One of the attackers threatened the man living there with a machete, demanding that he transfer Bitcoin to him. At the same time, another perpetrator struck the victim's wife several times with a Toblerone chocolate bar, as highlighted in the case materials. After the victim, whose name is not disclosed in the interest of the investigation, transferred the crypto assets, the group of attackers fled. According to the case materials, John Ross Rennie did not participate directly in the raid. However, the prosecution proved that he advised the attackers on the transfer of crypto assets and stored them for some time. In November 2023, he was sentenced to 6 months of judicial supervision and 150 hours of community service. However, the police were unable to confiscate the Bitcoin at that time because it was inaccessible. Court decision. The prosecution made a second attempt to confiscate the crypto assets using legislation on proceeds of crime. The assets are expected to be converted into fiat currency at the exchange rate at the time of the robbery. The court decision stated that 23.5 BTC were valued at £109,601, about $143,000. As of the preparation of this material, Bitcoin is trading at $59,000, according to TradingView. At this rate, 23.5 BTC are valued at $1.38 million. The mechanism for directly seizing the assets is not covered in the decision. It should be noted that in November 2023, the UK government passed a bill on the confiscation of crypto assets. By early 2024, the police had already seized 61,000 BTC in a large-scale fraud case. 7th News. An engineer from Missouri was arrested for extorting 20 Bitcoins. Daniel Ryan, a 57-year-old from Kansas City, was arrested on August 27 after attempting to extort Bitcoin from an industrial company headquartered in Somerset County, New Jersey. Ryan worked as an infrastructure engineer at this company. According to the prosecution, some employees received an email stating that all of the company's IT administrators were locked out or removed from the network, and that data backups had also been deleted. The hacker threatened to disable 40 servers every day for 10 days if the company did not pay him 20 BTC. During the investigation, it was revealed that Ryan gained unauthorized access to the company's computer systems. He scheduled several tasks in the network, changed administrator passwords, and disabled the company's servers. Ryan took control of the email address he used to send ransom emails to employees, the U.S. Department of Justice said. The prosecution suggested that Ryan used the PS Password tool from sysinternals utilities to modify domain and administrator accounts. The accused appeared in court on the day of his arrest. He was charged with wire fraud and faces a maximum penalty of 35 years in prison and a $750,000 fine. In June, hackers managed to breach the system of Los Alamos Public Schools and the educational platform Edgenuity. The attackers demanded 30 BTC, threatening to publish confidential data about students and their parents.